All right, moving on. The rising interest rates in the country are expected to attract more investors towards short fixed investments, according to the Quarter 2 2023 Economic Outlook report released by Old Mutual Investment. Now, the Outlook is a quarterly Kenya investment discussion forum on the prevailing macroeconomic environment and its influence on available investment options for both retail and institutional investors. Speaking during the forum, the group's East Africa Managing Director, Anthony Mwithiga, said investors would be looking at investing in instruments which provide higher current returns, such as money market funds.
Our expectation is that in the coming quarter, a lot of investors will favor fixed income, and that means your bank deposits, your treasury bills, your money markets, because interest rates are rising. So that will be favored by investors. The stock market, we anticipate that the stock market, the company performance, if you look at the manufacturing, the listed manufacturing sector, the large companies, we expect them to continue in their positive performance. The telco performance will be positive. Banks will be positive, although there's a bit of concern around the rising NPLs. But the key concern around the price performance of the market is that most investors may not come back into the market because they have alternatives to go to get short-term performance. But for long-term investors, the stock market is very good, because if you look at where the market is, now you can get an average dividend yield of 9 to 10% in the market.
So two things Kenyan investors need to look for in the next quarter, which is quarter 3 of 2023. So from the economic environment, we track 4 things. We track currency, interest rates, inflation, and GDP or economic growth. We tell Kenyans that those parameters, those four economic parameters, will largely be at similar levels at current status, but others will marginally worsen and others will marginally improve. For example, the currency will marginally improve. That means it will weaken, but with a decreasing trend. And there'll be more stability. And there'll be more available foreign currency through dollars, given all the mechanisms government has put in place through the Central Bank of Kenya and the banking industry. On inflation will start easing out for many reasons, but the two key ones being success of the ongoing long range and food production improving, low cost of prices in food substances coming to ease inflation.
All right, that's all we had for you here on NewsDesk. Thank you so much for